Welcome to the Akwa Flow Crypto Lab. In today's video, I will talk about two charts. The first one is the one that you can see on the screen right now. It's a brand new chart with a brand new indicator. I called it the Bull Bear Cloud indicator and I'm going to talk about it in a second. Then I will share an update of the big picture chart and there are a lot of interesting things happening right now. I can't wait to share it with you. If you're new here and you like the content, please consider subscribing to the channel. Now it's time, let's begin. So, as I promised, we'll start today's analysis with this brand new chart. You know that my indicators always use the same principles, supports and resistances. The kind of band that you can see on the chart right now, sometimes it's red, sometimes it's green. This band is a resistance in bear markets and a support in bull markets. I added some colors to help you to easily visualize bear markets and bull markets. The band has three colors as you can see, red in bear markets, green in bull markets, and sometimes it can be orange, and this means that we could be in a transition phase. Let's take an example here just before the final blow-off top of XRP in 2018. As you can see, XRP had this major top, came back down to retest the cloud. The cloud turned orange, meaning that we could be in a transition phase to transition into a bear market. But as you can see, the price didn't cross the cloud. It stayed above it, even if we stayed inside it for a while before using it again as a support. But globally, you see that we were just right here. We came back down, used the cloud as a support before having a higher high. Then just after the blow-off top, we came back down again to retest the cloud. And the cloud turned orange once again. We had a nice rebound with this candle. But as you can see, we crossed the cloud this time. And that's how we knew that we were in a bear market. Indeed, after crossing the cloud, we had kept it as a very strong resistance for more than 2 years, guys. After the cross, we tried to go above it here, but we used it as a strong resistance. We got rejected. Then here we got 3 rejections in a row, once with this candle, then with this candle, and again with this candle. Despite the fact that the cloud turned orange, meaning that we could have a possible breakout, we failed to go above it with 3 attempts and we came back down. These 3 rejections in a row were a clear indication that the market was not ready to transition into a bull market. This is proof that sometimes we just need to observe the market to understand what it wants to do. And those wicks piercing the cloud with the candles not able to close above the cloud were a sign that the bear market would continue. Then here, from here to here, we had a huge move to the upside, but as soon as we hit the cloud, we got a strong rejection to the downside. And this led us to the bottom of the previous market cycle. Now this is where things get interesting. Here, with just one candle, we pierced the cloud and we closed above it. This was a first positive sign, but it was not enough. What really made a difference is the fact that the price went back to the cloud to test it as a support this time. This is key. For the first time in years, XRP had kept the cloud as a support instead of a resistance. And this was the second indication that the bear market was coming to an end. Then here I agree it was a very scary situation with this gigantic bearish candle. As you can see, we closed below the cloud because the cloud was just right here and we went below it. We closed below it, right? Fortunately, on this chart, I also put the bull bear line with the blue dots and the bull bear line saved us, as you can see. But this was not an organic move. And technically, even if we don't use the bull bear line to help us, if we zoom in, you will see that we closed of course below the cloud, but with the candle just after we came back down inside the cloud. So we have no candle body closing below the cloud. This means that technically it was still a support. In order to have an official breakout below the cloud, we needed a candle body, a full candle body below the cloud, and it was not the case. Let's move on. Then, of course, we had our major top in the current cycle. We came back down to retest the cloud once again, and every time that we retest the cloud, we have a huge bounce to the upside. The exact same thing happened in 2018. You remember when we were there, we came back down, we tested the cloud, huge bounce to the upside. Here it was exactly the same scenario. And a few candles later, we were still there after the bounce. We stayed just right here, and then we closed below the cloud. This was the first warning sign. But just after, we had an official body of a candle closing below the cloud. This is crucial, guys. This was the very candle that triggered the bear market that we are still in. And in this bear market, we tested the cloud multiple times. As you can see with this candle, of course, we tried to stay inside it, but we couldn't. We got rejected. Then we tried again with this candle. We couldn't go above it, so we got rejected in a stronger way this time. Then more recently, we tried to go inside it again just right here, but we got a rejection, and even here, but we got a strong rejection once again. Now, what about the current situation? As you can see, the cloud is still above us. There is this huge red area above us, and we are still below the cloud, meaning that technically we are still in a bear market. This is no surprise, guys. Currently, the cloud is between 46 cents and 51 cents. But right now, we have a more important line to overcome. It's the bear market resistance in blue. You remember that here we crossed it also officially, and this was the beginning of the bear market. And more recently, we tested it just right here, but we got a rejection from it. And as you can see, when we were there, we got rejected by the cloud without touching the bear market resistance line, right? But this time, as the bear market resistance line went below the cloud, it became our closest resistance. So now we are facing it, and we got rejected by it once when we were there. And with this candle, once again, we are rejected. But in the future, the line is going to flatten out. This means that XRP has a great opportunity to cross it in a smooth way. But if we do not, expect a massive rejection, like it was the case during the previous bear market. Here from the bear market resistance, we got rejected. Here again, here again. So if again we are not able to cross the line, we will have a big rejection in my opinion. This line is no joke, trust me. Of course, if we go down, the perfect target would be the mountain indicator, which is currently around 21 cents, a bit lower than 21 cents. I'm not saying that we will go down, I'm not saying that it will go that far, but if we do, this would be a great opportunity in my opinion. I hope it's clear. Now it's time to switch to the big picture chart. As the video is already a bit long, I will give you a quick update. As you know, this chart is a weekly chart, and as you can see, just right now, we are trying to go above the bear market resistance. This is very, very important. As you can see here, we tried to go above the line, but we couldn't. We got a rejection. Here again, we tried to go above it, and at the same time, we hit the last resistance circle, but we couldn't cross them, and as a result, we got rejected again. And for the third time in a row, we are trying to go above the bear market resistance. This is very, very important, and it's happening in front of our eyes. Remember that this line, this bear market resistance, is a key line for the market. If we are able to cross it and then to use it as a support, guys, it would be wonderful. But it's too soon to be happy. We knew that this confluence zone between the bear market resistance and the last resistance circle in red crossing, right? We have the last resistance circle coming back down and the bear market resistance coming back down. So we knew that with this beautiful area of confluence, it was a great opportunity for XRP to try to cross both lines at the same time. So now we need to be patient to wait and see. We've been waiting for so long and now it's happening. It's just the middle of the week, so there is still a long way to go to know where the price will go. So today it's Wednesday. As you can see, we are just right at the price of the bear market resistance, but by Sunday the price could be higher or way lower, because remember that the last resistance circle in red is still a resistance, so it could push us back to the downside. XRP is very close to a major move, and it all depends on if XRP is able to cross the bear market resistance and to use it as a support. Also, I don't want to discourage you, but I have to be honest. You remember that we also have the bull-bear band above us, right? So even if we are able to cross the bear market resistance, we still have this huge area of resistance above us. To make it official, to be sure that we are in a bull market, we would need to cross, of course, the bear market resistance, as I said, but we would need to cross this entire zone and to use it as a support. So let's be humble. Let's take it step by step, and the first step is to cross the bear market resistance, which is currently around 39 cents, a bit higher than 39 cents. The bull bear band is a bit higher, around 41 cents, and the top of the band is currently around 69 cents. What about the support? Our closest support is the green line, which is currently around 34 cents, a bit lower than 34 cents. So for this week, I want you to remember all these levels. We are very close to the decision day. In a few weeks or even days, we should know. If you want to track what will happen with us, do not forget to subscribe to the channel and give me a thumbs up if you like the content. That's all for today's video, and as always, time will tell.